must be, not should be, not might be, not could be, must be a wide range igniting bar, right? It has to be igniting a new move, all right? You're not going to get a 3-bar play that's up 7 bars in a row, magically puts in a little red bar and then goes higher. I've been getting a lot of that where people are showing me moves that are up 4 bars. There's a tiny little red bar after 4 huge bars, and then, oh, look at the 4-bar play, look at the 3-bar play. Okay? That is not it. Okay? So igniting bar means, just in case you're not sure, the first or second bar of a move. This is extremely important. It has to be the first or second bar of the move. Okay? Wide range bar means it should be at least double the size of an average bar. Now, this bar should have increased volume, but it's not required. Increased volume equals increased commitment. Volume is commitment or lack thereof commitment. Okay? You want to take a picture of a perfect 3-bar play and you want to put it on your wall. You want to take a picture of a perfect 3-bar play and you want to put it on your wall. And every time you go to take a 3-bar play, look at the wall and go, do these pictures match? Does the picture on my platform match the picture on the wall? Okay? You see a green bar, a red bar, and a green bar. That means this red bar has to be at least in the top half of the green bar's range. So let's just say this bar is $1. This wide range green bar is $1. That means the red bar has to be in the upper 50 cents because that's the upper 50%. Otherwise, it's not a resting bar. It's an engulfing bar. Okay, so bar number 2, and if it's a 4-bar play, bar number 3 as well, if it's a 4-bar play, they have to be in the upper 50%. It's preferable, hear me out, it's preferable if they're in the upper 25 or 30%. The smaller this bar is, the better. You want the high of bar number 2 to be about $50. If it's at, 50.02 or 49.97, that's fine. But if bar number 1 high is 50, bar number 2 high cannot be $50.50. That's 50 cents different. Okay, it's 50 cents. They have to be relatively equal highs. Now, obviously, if it was on a daily chart, you'll be a little bit more flexible. If you're trading a 2-minute chart, pennies matter. Nickels matter. Okay? So, it has to be in the upper 50% of bar number 1, and it has to have a relatively equal high. Okay, bar 3 and 4 now. This is the trigger bar. This is the entry bar. This is the trigger bar. This is the entry bar. Yes, I repeated myself. The stop loss goes under the lowest bar. Whether that's bar 2 or bar 3, the stop loss goes under here. The question I've been getting frequently is, when do you get in? You get in the nanosecond that bar number 3 breaks the high of bar 1 and 2. As soon as bar 3 breaks the high of bar 1 and 2, you enter the stock and you place your stop loss down here below bar number 2. You enter as soon as it breaks the high of bar 1 and 2, and you put your stop loss below bar number 2. That's it. If it's a 4-bar play, you enter the same way. You get in above bar number 1 or 2, and your stop loss goes below the lowest of these 2 bars. If bar number 2 is lower than bar number 3, you go below that. If bar number 3 is slightly lower than bar 2, you go below that. Entry right here. Put my cursor on it right there. Stop loss down here. Note, the color of bar number 2 or 3 doesn't matter. I don't care if bar number 2 is a green bar. I don't care if it's a doji bar. I don't care if it's a bottoming tail bar. I don't care if it's a topping tail bar. I don't care if it's a red bar. As long as it has a relatively equal high and is in the upper 50% of bar number 1. I'm speaking slow and clearly because I don't want you guys to mess this up. The play is valid on longs. It is also valid on shorts. We did it today on Tesla. That's the Tesla trade. We made money with the stock going lower. Wide range bar, 2 narrow bars with relatively equal lows, and the stock dropped. Okay? We did it today on Tesla. So now you have the basic criteria. This is right out of the manual, guys. I'm giving you a page out of a $2,000 course right here, okay? Right out of the manual. Bar number one must be a wide range igniting bar, okay? It's best if it's clearing resistance. I'm going to show you this in a couple minutes. So bigger picture. We call it the top-down approach. You start with a daily chart or a 60-minute chart. I will talk about this and discuss this when we get to the scanning section. You start with a 60-minute or a daily, and when you have void or a nice gap, then you can drill down and look for a 3 or 4 bar play. So if I look at the 60, this stock is breaking support. See the pivot support here? Pivot support here? Pivot support here. You're breaking under this, under 266. This stock has room down to 260. Call this void. So this is my tradable void. This is the range in which this stock should drop. Okay? It's the range in which this stock should drop. So notice what happens. On the gap down, we break 266. Now, take a look at the bar compared to the rest of these bars. That's a wide range bar. See the rest of these bars over here? Now you look at this bar. So you're breaking 266, breaking it, okay? That means we're in the clear now. We broke this support area right here at 266. See it? Sweet. Now that we've broken it, it's time to look for a pattern. It's time to look for a pattern, okay? So we get a wide bar followed by a narrow bar, and in this case, another narrow bar. So this is actually a 4-bar play, right? We're going to get in right below the low of bar 1 and 2. They have relatively equal lows. They're not perfectly, but they're close. I'm going to get in right in that 265 area. Got filled about 10 cents late. I got filled at 264.90. Put my stop up here around 266. It's a little below that area. It's more like 265.75, right? Okay. And then you're going to let this thing drop. Now, why is it able to drop? Because the 60-minute chart has room to drop. Support here is like 195.50, right? We gap down, and once you get under this area, there's nothing but space here, right? There's nothing but space here. So a wide range bar breaks below this area. So once we break support, now it's time to look for a pattern, right? Any pattern. In this case, a 3-bar play. Wide bar, take a look at the size of that bar. It's like $1.25. Look at the size of the rest of these bars, right? So this is a wide range bar. It's at least twice the size of an average bar. Then we follow it by a narrow range bar. Another technically could be a narrow range bar or the entry. I think it just peekabooed to the entry. They have relatively equal lows, not exactly to the penny, but within a nickel or a dime in this case. It's a $1 stop loss. 194.60 is the entry, 195.40, so an 80-cent stop loss. And look at this thing tank. It's a 2-minute chart, guys. So in 2, 4, 6, 8, 10, 12, 14, 16, I don't know, 25 minutes, this thing dropped $5. Give or take, $4. That's what? 5 to 1 on your money? Okay, 5 to 1 on your money. All right. Guys, they happen on all stocks. They don't just happen on high price stocks. They don't just happen on low price stocks. They even happen on Google and Amazon and Facebook. And they even happen on the Qs. And they even happen on the SPY. Okay? Do you understand where I'm coming here? They happen on the short side. They happen on high price stocks. They happen on low price stocks. Okay? Here's another one on the short side, guys. Again, I'm putting the daily chart in here so you can see. You start with the daily. Look at this gap. You're gapping under 1, 2, 3, 4, 5, 6, 7 green bars. Now, I want you to think about this for a second. If you bought low the day before at $110, thinking, oh, it's going to go up to 120 or 130. Okay, let's just say, imagine, hypothetically, you bought low yesterday at 110, and you wake up today and it gapped down to 100. You're 10% down overnight. How are you feeling? you're probably uttering some 4-letter word that's inappropriate. But for our purposes, this is money. We are taking advantage of somebody else's misfortune, because many of these people will panic and they will sell their stock. They'll panic. Okay? The average person, I'm sorry to say this, I apologize for saying it, the average person is an idiot when it comes to the stock market. Do you know how many people out there said in 2008 and 9 they'd never invest in the stock market ever again for the rest of their lives? Thousands, millions of people did that. The market's up 6-1 since the bottom, 7-1 since the bottom. How's that working out for you guys that never invested in the market ever again? Okay? So my point is a lot of these people will get out. It gaps down under support and all of this green. That's huge shock value. So we have room from roughly, okay, what is that, 104 down to the pivot support at 98. Roughly 104 to 98. That's our tradable range. So what do? We wait for the stock to get in the tradable range and we trade it. So you get a wide bar, narrow bar. This one triggered, chopped a little bit, and then went. So this one took a little bit longer, maybe 40 minutes. Okay? It was a $1 stop loss, and this thing went down, I don't know, about $2.50, 2.5 to 1. Okay? Made $450 on it. Once you get over 209, 210 right here, nothing's above this. Okay? Nothing is above this. How do you decide your exit? We'll talk about that in the management chapter, okay, which is coming up in a little bit. All right? So gapping up to 210, there's nothing above. So what do? We wait for it to get above 209.50 or 210 and we look for an entry. Okay? This is the resistance. This big pink line is the resistance. We get above it, we look for an entry. Wide range bar followed by a narrow range bar. The entry is 212, the stop is 211, rip. It went $3, went 3-1 on your money. Now this was a 15-minute play. It happened to right around 10 a.m. You had to sit on this for 2 hours. But hey, 2 hours for 2-1 isn't bad. It's better than digging ditches. Okay? This was the pre-market scan of this. Apple was near the top of my pre-market scan. Look at the volume. So I found it on my dollar gainers and losers, which we'll talk about later. I loved the gap, and I said, sweet, we have to put this in our list. And then it forms a 3-bar play. Okay? Beautiful. Simple.
Right. Please stop sticking in the house tonight. Move your body from left to right.